Welcome back, everybody. The market is up over 7% in 2024 already, but Apple is down over 11% on the year, and it's at a point where just about everyone seems to be down on the stock. And when you look at the headlines of what's going on with Apple, it's pretty much all negative. Apple's growth is stalled, China sales are plummeting, they have antitrust issues and fines, the Apple car is done, and they are woefully behind in AI, allegedly. So is Apple's era of dominance actually over? Well, in this video, we're going to go through the issues and sentiment on Apple, talk about what's worth worrying about and what's not, and what I see for the stock going forward. So let's get started. Now we'll begin with the EU fining Apple about $2 billion because of what they deemed illegal and uncompetitive practices, basically saying that Apple's practices may have caused many iOS users to pay significantly higher prices for music streaming subscriptions. And let me just recap what this is actually about, because you have Spotify, that poor $50 billion company that's the global leader in music streaming in terms of market share, complaining that Apple's practices were unfair, because Spotify was charging a higher price, $12.99, for signups in the iOS app compared to $9.99 a month for signups on their website. And they eventually just got rid of the signups in iOS altogether. And this is because Spotify didn't want to pay the 30% iOS App Store fee for any transaction that happens within the app. So instead of making less profit, they chose to increase their prices so that it didn't impact them. And Apple's rules state that they're not allowed to advertise to their users in the app to sign up outside of the app. Because, obviously, what store allows you to put advertisements to go find a better deal somewhere else? None. But the EU ruled that this was unfair, causing iOS users to pay more, even though Spotify was the one that chose to increase their price and then remove the option altogether because they didn't want their profits to be impacted. And let's listen to Gene Munster talk about this in a little more detail.
Gene, I do have a question about this EU fine. I understand it's $2 billion as of now, but that there's a high likelihood that Apple will appeal. Let's say worst case scenario, it doesn't work, they have to pay the $2 billion fine. Was it worth it? Apple has a pretty big cash pile. Was it worth it for the business perhaps it did get, even if it believes that it got it fair and square, for the revenue that it has acquired in the EU?
So $2 billion, I agree. I think it's probably going to be more like $1 billion after everything is said and done. It'll take a year. It's 3% of their cash at the $2 billion level. I think the bigger question for me is what impact is these type of fines going to have on Apple's App Store revenue globally. And on their last earnings call, they talked about that the App Store in Europe was 7% of total App Store revenue. So that basically equates to 0.5% of Apple's overall revenue. So they knew that this was coming, these changes were coming, that this fine potentially was coming, and they wanted to get in front of investors and remind them how small of a piece that this is. But it does not change the bigger question, is that there will be changes coming to Apple's App Store across the board. And this is probably 40% of Apple's earnings come from services more broadly. And so I think when I think about that dynamic, they'll eventually pay the fine. And what really sticks out, and I've been closely watching what's happening in Canada, the U.S., South Korea, Japan, the EU in terms of all these changes. Apple is really smart in terms of how they navigate this. They will go and make changes to accommodate the courts, but then they find ways to essentially charge the developers anyway. And I suspect that will frustrate and infuriate some developers, but at the end of the day, they're building huge businesses off of Apple's backbone. And I think despite their frustrations, they will continue to pay, and Apple will actually maintain better economics for their App Store over the next 5 years than I think what investors are expecting.
And look, I've talked about this App Store stuff multiple times on the channel, so you guys probably know how I feel about it. I think this is a ridiculous decision. And all of my EU viewers out there, I love you guys. You guys are amazing. But this EU decision is on par with the last EU decision that I didn't love, which was GDPR, which was that awesome regulation that's made most websites just completely unusable to me. I'm just saying. So is this ruling going to have a lasting impact on Apple and their business? Now, maybe there's going to be other rulings because of this one, but again, in the grand scheme of things, I think this is relatively small, and as long as Apple has the most attractive customer base that businesses want to reach, then they're going to be able to monetize the App Store one way or another. So it's not something that I'm too worried about. Okay, up next, the Apple car is dead, and that's probably okay. Apple announced that their Apple Car project, called Project Titan, is being shut down and that a bunch of the employees are being moved over to do generative AI work. Now, some people view this as a negative thing, but to me, I think it's a relatively small story because some car project from 10 years ago probably not really worth holding on to because cars are complex, cars are low margin, and cars introduce a lot of regulatory and political scrutiny. And I think MKBHD had the best perspective on it when he said, why build the car when you're likely already in control of the software that they're using? And Apple CarPlay definitely wasn't as widely used 10 years ago as it is today. Now, other people have said that Apple may have spent up to $10 billion and that it's a big failure for them. But I look at it like this. $10 billion over 10 years is nothing to Apple. They make over $100 billion plus in operating cash every year. And if you just go look at Meta, they've lost over $40 billion on Reality Labs in just the last 3 years, and no one cares. You know why? Well, I'm going to explain why here in a little bit. So the Apple Car thing was just another story to pile on to the negative sentiment about Apple, but I don't see it as a real issue. But let's get to one of the real issues, which is AI. Because AI is definitely important, but probably not for the reason that you think.
What's wrong with this stock? I think what we need is in June at the WWDC to hear about the AI innovation. And you had a little bit of a glimpse into it yesterday. And why is it so particularly relevant? Because in the last 6 months, the perception of the marketplace is that Apple is not innovating quickly enough in that direction and certainly has not laid out what the strategy and the plan is for AI.
Apple has been criticized because they haven't announced their AI plan, and the market assumes that they're behind everyone else, and it's hurting the stock. But I think it's important to first talk about how Apple's different than the other tech companies, because that helps explain why their approach is a little bit different. NVIDIA, Microsoft, Google, and Amazon all have pretty clear business cases as to how AI helps revenue, mostly because they all have an enterprise or business-to-business customer base. NVIDIA is selling chips to the richest companies in the world, which are the same companies of Microsoft, Google, Amazon, and Meta, and that's why their growth and stock price has gone through the roof. Microsoft, Google, and Amazon have the cloud component where most of the AI discussion has been so far, about what features they can build out for their business customers who have money to spend. And yes, Microsoft obviously has their OpenAI investment and integration into their search and productivity products. But again, Microsoft has a large enterprise customer base who buys their bundled software and subscriptions. So it's not hard to imagine how new AI features may help with incremental revenue even there. And Apple's not likely to compete in those areas unless they announce something completely new, which isn't out of the realm of possibility, but it's not something I would bet my investment on. But when it comes to similarities, Apple is more like Meta as it relates to AI. Because Meta's been talking about their AI progress, the Llama LLMs, how they're integrating into their social media platforms to make creating content easier, and all those things are fine. But I wouldn't consider any of them to be groundbreaking. And when you compare what Meta's doing to what Apple is doing, I think a lot of it has to do with what's actually being announced and how transparent they are with their plan, because a lot of these quote-unquote AI features are things that even exist today in Apple products, at least in a bare-bones way. Because they have things already like predictive text in Apple Notes, as well as Apple Maps automatically guessing where I'm going based on the time of day I'm leaving and my previous history. So the pieces are there, they're just not really talking about it. And in a lot of ways, I would consider Apple's opportunities in AI to be better than Meta's overall. They have their own chips that are amazing. They have all your important data that no one else has, like your calendar, your notes, your location history, your health, your emails. And they have about 1.4 billion of the most loyal customers who mostly won't even think of leaving their iPhone. And Gene Munster talks about this, so let's listen.
The fundamental question that investors are asking, again, which is what does this mean for the business? And I'm going to fill in some of those blanks, is that what it means for their business, of course, they will use AI to make better predictive text and add kind of the fit and finish around their hardware and software, like some of the Macs that they've announced today. But more importantly, this is an opportunity that they come out with a subscription for personalized AI. And I think this is one of the big unlocks for consumer value in AI. And essentially, it is a unique place that Apple has because of their role with privacy and security and the trust that they have with consumers. People will be willing to let Apple use their data, opt in, to allow these AI bots to do tasks for them. Contact your utility company, book a trip, compose emails. There's a lot that can be done. And when I think about that opportunity, it comes down to a subscription business. And if you look at their active install base of devices, that's something that they're really clear about. That's 2.2 billion, growing about 8% a year. They don't give out the active user number. I estimate that that's about 1.4 billion. But if 20% of that 1.4 billion would opt in for a $10 a month personalized AI service, so it's going to take a few years to get there, that would add over 15% to Apple's earnings. And so, Dom, when you put all of this together, understandable investors' reaction, but I think investors are forgetting that there are almost 5 billion people that live their lives throughout the day on Apple devices. That stickiness is a huge long-term opportunity for them to sell AI products into.
And I agree with a lot of what he says in that clip. Even if it's something that doesn't sound really new and exciting, it's something that can be extremely valuable that just becomes this thing that integrates into our daily lives that we can't live without. But here's the key point. I don't think Meta has been crushing it because everybody loves their AI strategy, and I don't think Apple stock is struggling because they haven't announced one. The differences in performance of the two stocks comes down to something very basic in my opinion. It's about business fundamentals and growth outlook.
It's a 30 multiple stock with high single-digit earning growth.
So Kerry was saying just now that their earnings growth is expected to be about 7%. And so Scott, when you say what's wrong with this stock, I think it's a really easy answer. What's wrong with the stock is that over the past 3 years, the CAGR of revenue growth has been 2%, and the CAGR of earnings growth has been 5%. And with a 27 times multiple, that is simply not good enough.
Now let me give you the Meta example. From the lows of 2022 to 2023, here's what Meta did as a business. They cut SG&A costs by $3 billion, or about 13%. They increased revenue by 16% as their ads business grew, and they increased income from operations by 62%. And as of today, from a valuation perspective, they sit at a 33.5 price to earnings and a 25 price to projected earnings. And from an operational cash flow perspective, they're at a 17.86 and a 16.04 projected operating cash flow. So when investors sees that and they say, okay, here's a business that's at a 25 forward PE, they just increased revenue by 16% year over year, they have a documented AI strategy that they're executing on and spending on, and so the opportunity is clear. But then if we turn around and look at Apple's situation, it's a different story. From 2022 to 2023, they cut SG&A costs by about $160 million, or about 1%. Their revenue decreased by 3%, and their income from operations decreased by 4%. And as of today, from a valuation perspective, they're sitting at a 27.14 price to earnings, a 26.61 price to projected earnings, a 23.11 price to operational cash flow, and a 22.93 price to projected operational cash flow. And so the bottom line for Apple is that their business just isn't growing like the others are. If Apple came up with a product tomorrow that had really high growth prospects, nobody would care if they had a documented AI strategy or not, because at the end of the day, it's still about business fundamentals. So what are Apple's growth prospects for the future? Now, first off, if you look at the article from today, it's more doom and gloom, saying iPhone sales in China dropped 24%. Now, I have no idea how legit this article is. It says 24% for the first 6 weeks of the year, which I don't really even know what that means. And we should probably balance that against this article from the end of January that said iPhone was number 1 in China for the first time ever. But to be fair, Apple's revenues in China were down 13% year over year in their first quarter earnings, so it's definitely something to keep watching. But let's talk about Apple's revenue a bit, because most of the criticism is about their low growth prospects compared to their high valuation. And if we look over the past 10 years, Apple's current growth actually looks very similar to previous cycles. As you can see, they had a big spike in 2015, and now remember, Apple's fiscal year ends in September, so new iPhone sales are mostly counted in the next year. As an example, 2015 was after they announced the iPhone 6 and 6 Plus in 2014. The 2018 spike in revenue was after they announced the iPhone 8 and 8 Plus, plus the release of the iPhone X. And 2021 was after the release of the iPhone 12, and 2022 was after the release of iPhone 13. And when you look at this pattern, you can tell that some of this has to do with the natural phone refresh cycles. People buying a new phone 2 to 3 years after their last one. Now, obviously, it's somewhat dependent on what new features or things Apple has in any given year, but at a minimum, every 2, 3, or 4 years, people are getting a new phone and sales go up. So when people look at 2023 and they say, well, it was declining growth, that is true, but that was also the case in 2016 and 2019 as well. And you have to consider the fact that they had explosive pull forward growth not only in 2021, but then again in 2022 due to the global pandemic where people were home from work and had stimulus money hitting their bank accounts. So what that means is that now that we're in 2024 and especially 2025, a lot of the folks who bought their phones during that pandemic are going to be due for a refresh. And it's going to happen right around the time that Apple probably announces something related to assistance or AI within the new iPhone. So if you ask me to make a prediction, I think it's likely to be positive single-digit revenue growth in 2024 with the expectation for higher revenue growth in 2025. But that's just my personal view. So what does this all actually mean for investors? Now, if you're looking for something that's going to heavily outperform in 2024, I don't think that's going to be Apple. I've said before that I think 2024 could be a year of multiple compression for Apple with a better outlook for double-digit revenue growth probably being in 2025. But if you're looking for a good long-term investment, I still think Apple is that. It may not be the highest growth big tech firm out there, but they have a lot of things going for them, especially the roughly 1.4 billion iPhone users, the high majority of which are not going to change phones, who are one of the most attractive target demographics for businesses and are increasingly using Apple services and features. As well as Apple having their own chips have made their desired hardware even better and gives them opportunities that their competitors won't have. So what does all that actually translate to? In my opinion, iPhone revenue will continue to do well, but peaks may be more spread out due to longer refresh cycles. Their services revenue will continue to increase, improving their margins and revenue predictability. When it comes to AI, Apple is at a disadvantage to their peers right now in that they don't really play in the enterprise B2B market, which is where all the obvious opportunity is for the moment. But having vertically integrated chips, hardware, and software gives them a unique advantage to deliver AI-related features to the end consumer in a way that almost no one else will be able to do. And the question will be, what exactly is that and what is it really worth to their bottom line? Acting like it's some crazy overvalued thing when they generate that much cash and they're still following their normal revenue cycle is, I think, a bit overdone. And if you don't believe me, I ended up actually adding to my position yesterday. So clearly I enjoy pain. So what do you guys think about Apple? Is their era of dominance over, or do you expect them to bounce back the way that I do? Let me know down in the comments below. Now, if you guys want to see my thought process and what I monitor for every stock in my portfolio, click on this video right here. Hope you guys have a great day out there. Financial independence is true freedom, so keep building and stacking wins, and I'll see you guys in the next one. Peace.